Now that we've uncovered the exposure in your business, we can start to talk about implementing new tax strategies that are going to reduce your tax bill. Now, the way to look at this is not saving you money on taxes, not causing you to pay more in taxes. The way to look at this is that you're going to pay the amount that you should pay in taxes if you're following the tax code to the letter. Now, what I mean by this is there's a lot of strategies that are specifically intended to be used, especially by real estate agents, but that are not being used. And I put these in two different categories. There's basic strategies, which we're going to talk about in this video, and then the next video we're going to talk more about advanced strategies. So basic strategies include your deductions, include your business entity structure, and include retirement accounts. So when it comes to deductions, vast majority of agents under-deduct. They're not taking all their business expenses into account. And the majority I talk to know that. They're not very confident they're taking all their deductions. A small handful are, but most of them are not. Even though this is a very basic thing, it is very neglected, which says a lot about the other areas we're going to cover in these videos. The next area is going to be business entity structure. Now, everyone's heard of using an LLC as a tax shelter. What they don't know is that that LLC can be taxed one of 4 different ways. Each one of those 4 different ways has its own tax implications. And a lot of people are told, you should have this, you should have that, by people who have not run the numbers and who don't know their situation well enough to make that assessment. They just make an assumption based off of what's typically used. But there's 4 different ways to run it, and typically we want to run 3 if not 4 different ways and actually look at the numbers and see which one comes out the best. So that's how we actually determine proper business entity structure for you. We don't just throw something out there, and I don't advise you to take advice from somebody who just throws something out there without running the numbers. And last but not least, you have retirement accounts. Also very heavily neglected by professionals in real estate. I can understand why some of that is. Most folks aren't very familiar with self-directed IRAs or 401ks, and likewise, people in real estate don't necessarily want to get invested in the stock market. Most of them do want to get invested in real estate, although there are exceptions to this. So the key thing with retirement accounts for us is we want to give you the tax perspective, but we want to take into consideration the requirements of some of these accounts. For example, some folks have a SEP IRA set up, but they have employees, and what they don't understand is some of the implications that SEP has when you have employees. I hope this was a helpful video. We just covered some basics here. In our next video, we're going to talk about some of the more exciting advanced strategies that you probably never heard of. See you in the next video.